But the problem with the housing market is the cost of building new homes has risen so much because of higher material costs, higher labor costs, and the price or the cost to buy those homes is much higher because mortgage rates have basically doubled from around 3% to 6%. So first-time homes are pretty much unaffordable now for anybody at the current price level, which means they're stuck as renters, which gives the landlords the ability to really jack up their rents because they don't have to worry about their tenants buying a place because they can't afford it. Meanwhile, there is a shortage of homes for sale because the people who own homes, they don't want to sell because they've got a 3% mortgage, 3.5% mortgage. They can't replicate that. The only way to keep that cheap money is to keep the house. So the people who have houses, the last thing they want to do is sell, and the people who don't have them can't afford to buy. So now you have a terrible housing market. And what's really going to happen is new construction is going to stop because nobody can afford to buy a new construction. So the whole home building industry collapses, and there go all the jobs associated with that. But when you have this diminished turnover, because even the existing homes don't sell, because the new buyers can't afford them, and the current owners don't want to sell them, you don't have the turnover. So you don't have the real estate agents, you don't have, remodeling, redecorating, the movers. I mean, so a lot of economic activity goes away when nobody is buying and selling homes. And what these politicians are worried about is the next election. And so if the voters are asked to swallow this bitter tasting medicine, they're not going to like it. And so they're not going to reelect the people that made them swallow it. So nobody wants to do it. But, it's unfortunate, but this bubble has to pop. The sooner the better. The problem is we've had cheap money for so long. The bubble is so big. We've made so many mistakes, so many misallocations of resources and malinvestments. There's a lot that needs to be unwound. A lot of companies that never should have been started need to go bankrupt. A lot of jobs that never should have been created need to be lost. Workers are misallocated. They're not doing the right thing. Look at our massive trade deficits of $80 billion a month. What does that tell you? We're not making enough stuff because too many of our people are employed doing the wrong things. They're in companies that only exist because of 0% interest rates or quantitative easing. Meanwhile, we're not doing the things that we need to do, and we're going into debt to buy the things that we're not making because of these misallocations in the economy. People haven't been saving enough. They're bending too much. All these patterns have to change, and they will change if the Fed allows interest rates to return to a free market level. But when that happens, again, bankruptcies, defaults, losses, everybody has to cut back, including the U.S. government. One of the things that the Fed has been financing is a massive growth in government spending. I mentioned the national debt is up $8 trillion since the pandemic. Who made that possible? The Fed, with its monetary policy. So if the Fed actually reverses course to fight the inflation it created, that's going to force the government to dramatically cut government spending. But they're not doing that right now. They keep increasing government spending. And so we're not doing any of the things that we need to do to fight inflation. Now, what the Fed is doing will let some of the air out of the bubble. So we're in recession already. The recession is going to get worse. Unemployment is going to pick up. But before it gets too bad, or maybe even after, it depends on how long they wait to pivot, and maybe there'll be another Lehman-type blow-up that creates a crisis, the Fed is going to surrender in its war on inflation. And it's going to fight a new war against the recession and financial crisis. And that means inflation is going to win. The Fed's going to surrender. It's not going to be like Paul Volcker, who was victorious. Powell's battle is he's going to end in defeat. And the problem is, when the Fed tries to stimulate the economy, when inflation is already well above 2% and it sends inflation into the double digits, the markets are no longer going to have any confidence in the Fed. When the balance sheet explodes above 9 trillion, then through 10 trillion and to infinity and beyond, the markets are no longer going to believe anything the Fed says about its resolve and its commitment. Inflation is going to be seen as here to stay, and it's going to be very high. And that's going to be a game changer because the bottom will drop out of the dollar. Long-term interest rates are going to soar, and the price of gold and silver are going to go through the roof.